Hi, welcome to the Move Smartly show. I am the editor of Move Smartly, Urmi Desai, and I am here with my co-host, John Pasalis of Realosophy Realty. Hey, John,
Hello again.
you have been making the rounds on the media this week. Lots of media appearances. So this is going to be a Move Smartly Ideas episode where we dig into housing policy and housing issues a little bit deeper than just looking at the market, but at the policies and happenings shaping the market itself. So the reason why you are talking so much is because the Liberal government in Ottawa under Justin Trudeau has just introduced some pretty big mortgage changes.
Yeah, it was interesting. What I thought was just going to be an uneventful Monday morning. I'm at the office, and all of a sudden, my email and my phone's on fire from journalists who mentioned this. What was felt like just a bomb was dropped in the housing market. I don't think anyone really expected this. But the federal government just dropped a big announcement Monday on mortgage rule changes that are going to have a huge impact on who can buy, qualifying for mortgages, all sorts of things, and it's probably going to have ripple effects on prices as well.
All right, so let's look at those mortgage changes in a bit more detail. The first is increasing the 1 million price cap for insured mortgages to 1.5 million. Both of these changes will become effective December 15th, 2024. That's the first one being proposed. The wording is to help reflect current housing market realities and to help more Canadians qualify for a mortgage with a down payment below 20%. So this is an adjustment that hasn't happened since 2012, the cap. So,
Mhm.
John, take us through this. Say I want to buy a $1.5 million home today with
Mhm.
a 10% down payment. What if I wanted to do that right now, if I go to a lender today?
Sure. So before we answer your question, I think it's helpful to unpack some lingo for those who are not familiar and what we mean by insured and uninsured. So in Canada, if you buy any home with a 20% down payment or more, you have what's called an uninsured mortgage. You go to your bank, you get your mortgage, your bank lends you the money, so on and so forth, all is well. But to stimulate housing and home purchases, governments effectively, and this is obviously an old policy that happened a long time ago, they created an insurance program that allows buyers to purchase homes with less than a 20% down payment. 20, less than 20. Back in 2005, 2006, you could actually buy with zero down. And it was eventually increased to 5% and so on and so forth. But effectively, less than 20% down, you could still get a mortgage, but you have to pay an insurance premium, which goes to either Canada Mortgage Housing Corporation, CMHC, or one of the other private lenders. And even though it's an insurance premium that buyers pay, the beneficiary are the banks. And the insurance is basically there to cover, well, what happens if this buyer defaults on their home? They don't have a lot of equity in it. And CMHC basically is there to protect the lenders from default. So that's basically what insurance is, or mortgage insurance. And currently, the maximum you can spend to get an insured mortgage in Canada is basically $1 million, right? Or just under a million. So if you're up to a million, you can basically buy with less than 20% down and you have an insured mortgage. The second you're over 1 million, you need a 20% down payment, right?
So if I go to the bank today
Yeah.
and I want a $1.5 million mortgage with just a 10% down payment,
Mhm.
I just don't get that loan.
Over a million, no, you won't get that loan. You need 20% over 1 million.
Okay. So it's not as if the part that's over a million, I'd have to pay more. Right now, I just couldn't
You
qualify.
just couldn't qualify. Exactly. And there are some people like that who have high incomes, but they don't have a big down payment. In theory, if we didn't have this rule, they'd be able to spend 1.3, 1.4, 1.5 million. But because they don't have enough of a big enough down payment, they can only spend 999,000 basically, or $100 million.
All right.
Um,
So December 15th, I go back to that same bank. I want a
yes.
1.5 million mortgage, and I have still only a 10% down payment. And
Yes.
I get my mortgage. And how
Yes.
much do I pay in insurance? Like, what does that
Well,
entail?
that's a great question. So you can get a mortgage. After this announcement in December, you'll be able to get a mortgage with 10% down. The minimum is probably a little bit less than 10%, but let's just say you want a 10%. You'd have your $150,000 down payment. You'd have a mortgage for the balance for 1.35 million. The insurance would probably be, I don't know, like $50,000-$60,000 on that, like the mortgage insurance. So it's, I don't know, maybe like close to 4%, I think, if you have the minimum down payment. Which if you think about it, effectively means that, and this gets added to the mortgage, right? So for example, if you have a 10% down payment and you have a 4% insurance premium, let's just say, to use round numbers, and that gets added to your mortgage, it's like buyers are buying with 6% down, if you think about it, because once you factor in that there's an insurance cost onto this mortgage, the actual home buyer only has 6% of the value of the property in equity. And that will be possible, after December 15th, I think it is.
All right. So it's not as if you come up with that 60,000, did you say, in addition to your down payment? It's rolled
No,
into
to their mortgage.
the
Yeah.
mortgage. Okay. So that is change number one. Let's talk about change number two, expanding eligibility for 30-year mortgage amortizations to all first-time home buyers and to all buyers of new builds. Again, effective December 15th, 2024. So this requires some clarification because the same Liberal government on August 1st, 2024, in their budget, permitted 30-year mortgage amortization periods for first-time home buyers of new builds. So this change, the expansion, is that it's now for all first-time home buyers, whether you're buying a resale or a new build.
Mm-hmm.
And it's for all buyers of new builds, whether you're a
Exactly.
first-time buyer or a older existing buyer or previous buyer.
Exactly. A bit confusing. And
Yeah.
just
Okay,
to
I got
unpack
it.
that a little bit, but you got it. You're 100% correct. Now, it's worth clarifying that uninsured borrowers, if you had 20% or more, you would qualify. You could get a 30-year mortgage. And just to clarify what we mean, like the amortization is how long it takes you to pay the mortgage off. The longer the amortization, the lower your monthly payments, assuming you keep the balance constant, right? Because you're spreading that payment out over a longer period of time. So what this policy effectively does is allow people to take on more debt because, the way the government positions it is, well, this will lower people's mortgage payments, right? So instead of your payment being, $3,000 a month, if we do a 30-year amortization, it's going to be $2,600 or something like that. But really what happens is most people want to spend more on their home. They want to get a nicer home. So they keep their payment constant. They just take on more debt, right? So this policy allows people to take on more debt. They're just spreading that payment out over a longer period of time. And like I said, the big shift is not so much in the new housing market. It's going to be that first-time buyers now who have insured mortgages are going to be able to extend over 30 years. So again, this basically contributes and helps people take on more debt to spend more on their next home.
Right. But in theory, an amortization period is, like you said, it's the period you have to pay off the loan. In theory, this means that you could manage your cash flow better. And in some cases, it allows people to be able to buy within their monthly cash flow. But what you're saying is people usually keep stretching themselves and just use that extra money towards increasing their house budget.
I mean, in particular, in expensive markets like Toronto and Vancouver, that's more likely what's going to happen. And some markets that are more affordable, I mean, maybe people will not stretch as much. They don't need to stretch as much. So I think it depends on the market, but typically in the Toronto area, that's usually what happens. People just take on more debt.
Now, remind me, the rule now is 25 for everyone?
So anyone who has an insured mortgage, so that means under $1 million and less than a 20% down payment, you can only extend that mortgage out over 25 years currently. And like you said, they had this small rule change that said, well, if you're buying a new home and if you're a first-time buyer, we'll let you extend it to 30 years. It was a useless policy. There aren't a lot of first-time buyers buying new homes with less than 20% down. So they just expanded it to all homes in the resale market.
Okay, so now I want to get your evaluation of these proposals. First, let's focus on the individuals or the households that would take up this offer. So they would actually take out a mortgage. under these terms. Does it have a positive impact on that segment to whom these changes are presumably targeted?
I mean, yes and no, and I think it depends on how you define positive. So certainly today, I mean, or I should say December 15th, and after that, in the first few months, if you are a home buyer who's looking at getting the market and you're priced out or it's too expensive and this helps you buy a home or allows you to spend a little bit more, then yeah, most buyers will find that that is helpful, right? That'll kind of get them on the ladder and so on and so forth. I'll let them spend whatever it is, an extra 6 or 7 or 8% more on their home. I don't know what the exact math is. But here's the thing: if that policy is so stimulative, where it actually leads to home prices rising, when without that policy, prices would have been flat, then that benefit is kind of gone after prices are up 6-7%. Meaning the only people who benefit are the people who buy right away. After 6 or 9 or 12 months, when prices are higher, you're no better off because, well, now you're just spending more on a home. Basically, you're like, yeah, you can borrow more, but home prices are a lot higher. So it's a short term. It really only benefits people in the short term. After that, if prices are rising, it's a bit of a wash. So it's an odd policy. It's kind of like a band-aid. Maybe it buys some votes from people who are trying to get in, but generally it's not an overly helpful policy.
And that's because when you say it's a stimulative policy, this
Mhm.
policy presumably, and the purpose of it is to get more people into the market that would not be in the market without these changes. So the
Exactly.
stimulation is more buyers going into the market and
Mhm.
chasing around the same types of properties is
Exactly.
right.
Yeah, and to be fair, and a little history, I mean, we used to have 25-year mortgages back almost 20 years ago. CMHC thought it was a good idea to increase them to 40 years. Of course, that fueled more debt and, more housing and more demand. And then they eventually reversed course and went back to 25 years. Now we're, of course, changing directions again and going back up to 30 years. So, again, it's the government's kind of incentives now are to drive demand.
All right. So you actually make the point that, let's move even higher level here, that the
Mhm.
actual intent of the Liberal government is to drive not just demand, but to push home prices up. So your tweet here says, in case anyone is still confused by what motivated today's mortgage rule changes, and you point to a previous quote from Prime Minister Justin Trudeau, housing needs to retain its value. It's a huge part of people's potential for retirement and future nest egg.
Mhm.
So this isn't accidentally pushing prices up, in your opinion.
It's
It's a reason.
deliberate. Yeah, 100%. I mean, listen, I think people are this is you know Canada has a lot of housing bears, right? And housing bears are people who are very pessimistic, waiting for the market to crash, and their hopes and dreams have been crushed repeatedly. I mean, yeah, prices dipped a couple of years ago, but when you have government and it's government policy literally to drive home prices up, they're doing everything possible to mitigate a decline right now. That's what these policies are. And I mean, everything our government has done over the past 9 years has been to stimulate house price appreciation. Like I don't even like it's so clear. I don't even think it's debatable. Like honestly, like if we look at the trajectory of home prices and rents, okay, it's either deliberate or they're like, we have the most clueless leaders on the planet. Like it's not possible. It's these policies they knew would drive home price appreciation, they knew would drive rents up. It's all part of the plan. And this is why, listen, I get tired talking about policy because government politicians, they talk every day about affordability, but they do the exact opposite of what it takes to make housing affordable. And this is a classic example. Rather than letting the market sit, prices stay flat, see what happens, maybe they dip a little bit, they want to stimulate it to mitigate any downward pressure, in particular markets like Toronto's condo market, especially that's seeing a surge in inventory. So again, these stimulative policies are designed to keep home prices, as our prime ministers say, as high as possible, to retain their value. And this is again, government policy, unfortunately.
And you point out that the way that this policy is being enacted, which is Canada-wide, makes it stimulative and also in an unexpected way. Here you note that outside of Toronto and Vancouver, 1.5 million buys you a luxury home in Canada.
Mhm.
So the solution to Canada's housing crisis is to allow people to buy luxury homes with 10% down and have our government insure those mortgages. You can't make this stuff up.
Yeah,
So, do you see that as being stimulative outside of Toronto and Vancouver in a market area that doesn't really need it, a segment?
100%. And it's just mind blowing that they're doing this. And again, the 10% down is a bit misleading because that's the down payment required, which once you take off the mortgage insurance, like I said, it's like we're funding people buying $1.5 million, what are effectively luxury homes in many communities outside of the Toronto and Vancouver areas for like a 5 or 6% down payment. And again, having the government insure these mortgages, and by insuring them, they actually drive the rates down. These mortgages, even though they're riskier, that's the odd thing about Canada's market. Even though these mortgages in theory are riskier because the people have less equity, the rates are lower because they're insured by the government, right? So it's a weird, it's just such a weird system we have in Canada where the riskiest mortgages have the lowest rates. And we have governments sort of insuring these and really encouraging any type of home purchases, including what is effectively high-end homes in most markets outside of Toronto and Vancouver.
I'm not an economist, but do they call that a perverse incentive?
Yeah, 100%.
All right. So another issue that is coming up, and this is from some other analysts who are applauding this measure, is because of an issue we have right now, and it deals with the housing supply shortage problem, or
Mhm.
part of the affordability problem. And the issue there is that because the market is really flat and not moving much, there is an inventory building up of and so some people think this measure will help. For example, Professor Mike Moffat says in the National Post that we have a problem with the unsold stock of condo inventory, which is slowing down the construction of new housing. This should help that. So I want you to help me understand this. I would think that if there's a bunch of condos just sitting around not sold,
Mhm.
for some reason the prices don't drop enough to get them to move. I'm not sure why that is. Does this help people come in, buy all those unused units, and prevent the chance that future units are being on hold? Is that the argument being made here, or am I missing something?
That is the argument being made. I mean, it's not surprising I disagree with the argument. I mean, I typically disagree with a lot of what Mike says. I mean, how do we frame this? Okay, first off, we need to talk about when your question about prices and unsold inventory. For
Yes.
the most part, when we talk about new construction, the unsold inventory is unsold inventory of pre-construction units, right?
So
So
not
build
a condo sitting around.
not generally, no. That's not what we're talking about, really. I mean, it's primarily pre-construction sales because a builder needs to sell, say, 70% of their building to pre-construction buyers in order for them to break ground and start new construction. No one's buying pre-construction condos today, right? Um, why are they not buying pre-construction condos? Largely because they're 30-40% more than resale condos. Okay. And why would you do that in this environment? I mean, you wouldn't do that because prices are flat. It seems like a very risky decision to spend 30-40% more for a resale condo than an existing condo. People were doing it in the past because prices were going up 10+% per year. So, in an environment of rising prices, sure, people are going to go up and load on debt and buy pre construction units. Again, one of the conditions of our housing market and new supply was rising home prices. The experts who keep on with supply haven't figured out how to build more supply in an environment of flat home prices. Okay. So, this idea that these policy changes are going to solve this or contribute to the clearing or buying of pre-construction condo inventory. I mean, I don't even can think about how to say how unbelievable that is. Okay, for that to be true, one of two things has to be true. either you genuinely believe that it's mom and pops with strollers, families going out and buying 500 square foot condos, and this policy will help them get into the market, or you agree with the consensus in the real estate industry that new construction condos are driven by investors. Okay. Now, it's important to keep in mind investors don't qualify for insured mortgages. They need 20% down. So, for this policy to help investors, we're basically saying our government thinks maybe we're going to just turn a blind eye to a little bit more mortgage fraud and pretend they're not investors and give them a mortgage anyways and fake documents and so on and so forth. So I don't know what scenario our government thinks is going to lead to this more stimulus, but it's only one of those two scenarios. The more realistic outcome, I think, is that it might stimulate more supply, but in an indirect way. If it stimulates house prices appreciating, which I think is the design of this policy, resale prices like existing condos. If condos keep going up again tomorrow, well, yeah, maybe investors get a little bit more optimistic and want to buy pre-construction condos. But again, we're back in this cycle where we're only building new housing in an environment where prices keep rising. So again, I don't buy this argument that this is going to help our pre-construction market. It's only going to help it if we're stimulating resale prices increasing. That's it. There's no investor that's going to be driven by this, and no mom and pops and families with strollers are not buying 500 square foot condos. I will take the opposite side of that argument, or stick to that side.
And a very important observation that we don't know, or nobody's figured out how to build in a low price environment. On the flip side, costs are said to be so high in the building side that these units have to be sold at certain prices in order to move. And that's why these prices aren't coming down on their own.
Yeah, exactly.
Can you explain a little bit more about that?
Yeah, 100%. Like, the builders bought their projects at a certain price. Construction costs are certain fixed costs. We have development charges that are surging. The builders need to sell at a certain price to make a profit and to take on that risk of building in this environment. And if they can't get that price, they're just not going to sell. They're just going to wait, and they might cancel the project, and they just might wait for the market to recover. Now, certainly small builders can't do that, which is why you hear about projects failing, builders going broke. You know what I mean? But bigger builders are just going to wait out the market, and this is, I think, part of the delusion of this, more supply will drive prices down. That's not how the world works. I mean, if prices start falling and builders aren't getting the price they want, they just largely stop building and wait for prices to recover and people to pay what they need and what they want. And again, I think that's kind of what our government is trying to do here.
But I'm confused. If we haven't figured out how to sell except in high price environments, and builders won't sell except in high price environments that cover their costs, can you explain to me what kind of measures would work on the other side of the problem? For example, bringing building costs down. So we've heard about, fees, but would you argue that maybe a bigger effort to provide a bank of lower rate lending or something to builders in this kind of environment would make more sense?
Yeah,
or
100%.
Something like that?
Yeah. So just to be clear, I mean, when I say high, I mean, like, we haven't figured out how to build outside of a high price growth environment.
Right. But there's an argument that a certain amount of price is needed because of the high
100%.
cost.
Great.
Right. So I'm thinking, well, how do you then square those
100%. So it's a great question. And governments can do multiple things right now, especially in a slow environment. So like, the federal government removed HST on purpose-built rentals as an example. Well, why aren't they removing it on new housing for first-time buyers if they want to encourage first-time buyers? This is a direct tax on the supply of new housing. Why don't they lower the provinces lower development charges? Municipalities, or offer an incentive to lower development charges for first-time buyers. These are direct incentives. And I think one important thing to keep in mind here is that these incentives, these tax incentives, the decline in, say, development charges or HST, are going to flow through to consumers today because we're in a frozen market, right? we're in a market where no one's buying. So builders have a direct incentive to lower their prices, to sort of take the cut in fees and taxes, to transfer them to purchasers to drive more sales. Okay. If you try to do that in a market like we had 3 years ago or 2 years ago, when people were lining up to buy pre-construction condos and they were selling out in hours, well, any tax incentive you give to builders, there's no benefit to pass them on to the consumer, because the consumers are lining up to pay these top prices anyways, right? So the time to put in these incentives on lowering development charges, on lowering HST on new housing is now, when we're not building new housing. And this is the time where government needs to step up with money, and they're not. They're just like, we'll just like lower amortizations and let the market just kind of keep appreciating. Hopefully things work out.
Right. So instead of lowering costs, they decided to stimulate demand and up prices that way.
Mm-hmm.
To hopefully get the market to start moving. Now, not surprisingly, there is a very positive reaction to these announcements from builders, and
Mm-hmm.
realtor associations think this is fabulous,
Of course they do.
presumably because we're in a very sluggish market and anything
Yeah.
to see more sales would help. But not everyone thinks these changes are great. Interestingly enough, there's some mixed reaction from the mortgage industry, which I find surprising. You'd think they just want to issue more loans. So, the more demand, the better. Why would there be some reservations from some in the mortgage industry?
I mean, I don't think it's just mortgage. I think even real estate. If you look
Mhm.
on the ground, commentators, myself, Steve, who's on our show, Ron Butt, like a lot of people on the ground in the real estate industry don't think this is great. They think it's like with stimulative, going to drive prices higher again, which is ironic because driving prices higher and driving more demand is good for everyone's business. But I think we're at this point where everyone's freaking pissed off that it's so terrible for younger buyers. People can't get in. They're getting pushed out of cities, pushed out of the country. So even people in my industry who largely benefit from this don't like it. And I did a poll on Twitter, and I asked people, how many people think this is a great idea, these policies, and how many people don't. And I think the split was something like 15% love it, 85% hate it. And I have a lot of followers that are in the real estate and mortgage industry. So it's, again, many people, of course, the associations, many of them love it. But I think a lot of people in our industry kind of see the effect this is having on people's lives. And I think this is why largely most of us are not excited by this.
Very interesting. Very interesting poll, too. And you suggest that these changes, furthermore, don't actually address what voters want. So you tweeted that Canadians want lower home prices and less debt. Our government wants higher home prices fueled by more debt. Our
Mm-hmm.
government does not understand what voters want. Now, I
Mm-hmm.
want to challenge you, John. Is that really true? If 2/3 of Canadians own a home, don't they want prices to just keep going up and up? Aren't they another group, just like the realtors that you'd expect to be very happy today and the builders?
I mean, you'd think, but I feel like we've hit a tipping point recently in Canada. And obviously, I'm not talking about all homers, I'm talking about the majority. And from my experience, I mean, so certainly the 1/3 who do not own homes are probably not excited about home prices increasing. Among the 2/3 who own, my experience is not everybody loves it, because even the homeowners are paying a price. Okay. And they're paying a price in one of two ways. Either they have to take out mortgage debt to help their kids buy a home to stay close to them. And obviously, if you have more than one child, that can cost a lot. So either they feel pressured to take on debt to keep their family close to them, or in some cases, they can't. And their kids and their grandkids are leaving out of the city, leaving out of the province for more affordable markets. And generally, parents don't like that. They don't want their kids leaving. They don't want their grandchildren leaving, but they also don't want to take on $250,000 in debt to help their kids buy homes. So it's not this consensus that everyone wants to keep home prices surging. Now, certainly, I'm not suggesting that every homeowner wants prices to drop 40% tomorrow. No, but no growth, slight decline, like going away from 10% a year appreciation, I think most people would be fine with that if it means that their children will be better off in the future. And that's kind of what I see disproportionately on the ground. Yes, people who have 20 investment properties, they're not going to fall into that group, right? But I think most people would prefer that future rather than the future that kind of our government's heading us towards, which is constant house price appreciation.
Yeah, I mean, that's almost a definition of a crisis out of control when it gets so bad that it
Mm-hmm.
becomes a greater societal issue that even some people that might benefit under
Mm-hmm.
some of these conditions just find it overall detrimental to society, to keeping societies together, families together, and other things. So that's
Exactly.
basically what we're seeing. An affordability crisis is it's in a societal issue now. And um, I would buy that argument that sentiment has really changed. Uh,
Mm-hmm.
there was a time where people just wanted to hear their home prices are going up and up and up. My dad would always love to ask whoever how much his
Yeah.
home was worth. And but then I remember a couple of years ago that tune changing and almost like,
Mm-hmm.
oh my God, like this, I don't want it to go up. What are my
Exactly.
kids gonna, what is everybody gonna do?
Yeah.
So that makes sense also on an anecdotal level. Now, let's go back then to
Mm-hmm.
your argument that the government wants home prices to go up.
Mm-hmm.
You've already described that there could be other ways to address the issue of a sluggish or a market where inventory is not moving, for example, targeting that cost side.
Mm-hmm.
But you actually give a little bit more of an explanation why home prices being stimulated or moving up is what the government wants. So you say housing is a key driver of Canada's economy, and that
Mm-hmm.
driver depends on home prices rising. That's why, despite the years of promises about making housing affordable, in spite of those promises, housing keeps getting less affordable because our government creates policies designed to drive home prices higher. Can you unpack what you mean by this? I mean, it's one thing to only know how to do it this way, but why would they want to do it to address the sluggish market this way by home prices going up?
Yeah. So I mean, so when we think about the role that housing plays in Canada, in Canada's economy, a lot of Canada's economy is driven by household debt that is backed by mortgages, which of course secured by homes. And this fuels household consumption in Canada. So households spending more than they otherwise would because every year their home's going up by 80, 90, 100 grand. So they have this source of capital. And to be clear, a lot of this happened like back in the 90s when governments created HELOCs, home equity lines of credit, basically. And they basically made homes like little mini ATMs. So this fuels household consumption. It is also the key source of capital for these mom and pop investors who are buying condominiums. If their home's going up by 100 grand a year, well, all of a sudden in 2-3 years, they have an extra 200,000, they can invest and go buy another condominium. Now, all of this, of course, this stimulus for our economy depends on prices rising. The second prices stop rising, eventually that well starts to run dry. And it doesn't run totally dry yet. People still have equity, people still have money, they're still borrowing. But if you have a sustained period of flat prices, well, that source of additional money and funds doesn't exist anymore. And this has largely been a key driver of Canada's economy. And this is why I said earlier, we'd have to be insane to think that governments actually want prices to be lower and more affordable. I mean, listen, quite frankly, from the quote you said, our prime minister doesn't want that. That he was very specific. Prices. How do you have housing affordable when you also say houses need to maintain their value when they're so unaffordable today? Like that, we're gonna wait 15 years for wages to exceed home price appreciation. I mean, this is insane. And we're certainly not going to achieve that if we're constantly throwing debt and money and more credit to housing. So it's a huge factor. And this is largely, and I really think that, people who think this is just a little mortgage tweak are missing the forest for the trees. Okay. This is a much bigger policy decision that really helps the government avoid a sustained slowdown in the housing market, because they want house prices to keep appreciating in the future, because they benefit from that. And our economy benefits from that. And they can say things are great. Everyone feels richer. People are spending money. They're buying pre-construction condos. Everyone's doing great, except house prices become less and less affordable every year. So this is not just about little mortgage tweaks. I think that narrative is completely misguided. I think it's kind of been missed in the media that this is a broader policy goal to stimulate housing, push home prices higher, to extract more money out of people's household wealth to stimulate our economy.
Indeed. So it is more like an economic theory. It is a theory of how to keep economic growth going and where
Exactly.
to access the capital to do so.
Mm-hmm.
So that's why when you were on BNN earlier this week, I assumed you started talking about something called privatized Keynesianism.
Yeah.
And this is seeming like to be that, like we are getting to this idea where Keynesianism, and I'll have you named after John Maynard Keynes, uh, is a theory, an economic theory of stimulating growth when it's needed. So I'll leave you to unpack that. Why are you saying this is privatized Keynesian?
Yeah. So basically, traditionally, in an economy that's sluggish, the idea, put forward by Keynes, I don't know, like 100 years ago almost, is that governments should consider taking on debt to stimulate the economy. So if governments borrowed in bad times to stimulate the economy, to stimulate spending, to stimulate consumption, this would obviously mitigate sort of the downside risk of recession, stimulate the economy, and get us out of there, sort of mitigating these peaks and valleys in the economic cycle. Now, in the 90s, I mean, again, this is my position, like, and privatized Keynesianism is an idea in the literature, but in the 90s, what happened in Canada is that Canada largely stopped borrowing. I mean, Canada had its own sort of mini debt crisis under Jean Chrétien, under Paul Martin, and they basically cut as much as they could to get the budget balanced effectively, and including pulling back investments into housing. Right, we basically stopped building affordable housing. We stopped building. It's just everything got pulled off. Everything got shut. So basically, what happens is, governments look at our housing sector and say, well, we have a lot of homes in Canada. There's a lot of equity in those homes. Why should the government go up and load on debt to stimulate our economy? Why don't we get the people to just borrow against their homes to kickstart our economy? And this really, again, part of this was facilitated by mortgage financing. I mean, when you create mortgage products like home equity lines of credit, they effectively allow your home to become a mini ATM where you can just pull money whenever you want. Just go to the bank machine. You want to go on vacation, just put it on the line of credit, and you're accumulating debt. And this is really how a lot of households lived over the past 10 or 15 years. When your home's going up by 100 grand a year, you feel more confident spending an extra $10,000 or $20,000 more than you make, because overall you're still better off, right?
Yeah, I
And
remember doing household finances and remembering that after becoming a homeowner, there is this 10,000 a year kind of excess, of the trips or something that I would never have seen in my pre-owning days, because there was nowhere that $10,000 could come from.
Exactly. Yeah.
So it is true. I think a lot of us, without realizing it, a lot of families, even more so, with many kids or a couple kids, it's really easy to dip into that to deal with renovations, to deal with, all the nice little things too, like
All the
trips
things
and
we
everything.
want in our lives,
Yeah.
right?
Yeah.
And I'll say that it wasn't just consumption. Things, of course, accelerated when people started borrowing to invest in housing, right? So rather than our government saying we're going to stimulate housing by making investments to purpose-built rental, waiving HST, stimulating them actually putting money on the table to build the types of homes we need, they said, you know what? We're going to step out of this. We're going to let the private sector sort it out. We'll let the mom and pop investors load up on debt on their homes to fuel our new housing construction. Let's just get out of the way and let them do whatever they want. And that's largely what happened. And over time, investors became the dominant share of buyers of our new homes in Canada. And a lot of this was fueled by wealth from their existing homes, right? And this is why I say anyone who thinks that higher home prices in Canada are not deliberate is misguided. Like, our high household debt in Canada is a function of our government's policies. It's because our economy relies on people to constantly take on more debt as home prices appreciate to fuel housing construction. Again, going back to what I said, our government cannot figure out how to build homes now in an environment where prices are flat. So what are they trying to do? Stimulate prices so that we can build more homes in an environment of rising prices. So rather than doing the hard work of figuring out how to supply our housing market, rather than governments making the investments, they're basically saying, we don't want to put money on these issues. You know what? Let's stimulate housing. It doesn't cost us anything. And in fact, actually, we make money off of it because we're going to get insurance fees. We're going to get HST. We're going to get capital gains when people sell. It's a win-win for the government. They just sit back, stimulate housing, and things will all solve themselves. And I think this is, again, this is like structural in Canada. That's why I say, like, everyone who thinks it's just a little mortgage tweak, it's kind of missing the story here. This is foundational in terms of how policy and the role that housing plays in Canada's economy, and why structurally it's not really designed for affordability because our leaders don't want it to be affordable.
So some analysts, I've seen are arguing that, okay, if the government finds a way to not take on debt, finds another way for this to happen, in addition makes money, they have more money to spend on the affordability crisis in other areas and attack other parts of the crisis. What do you make of that argument? Like, would this, I guess the argument is they would build more dedicated affordable housing, why are some optimistic in that sense?
Listen, there are some economists who believe the approach that we've been on over the past 10 years. Drive our housing market by driving home prices up, get people to use the debt to stimulate more housing. Government gets insurance fees, government gets capital gains, they get HST, they got all of this stuff. It flows to them, and they've invested very little in housing. Right? So if you are thinking about it from the government's perspective and you want more housing with the least cost possible, then yeah, that's great. But, we have an environment now where all we're building are 400 and 500 square foot condos, which I don't think is great, but our government kind of doesn't care because it's a housing unit. It's a completion. So again, I think it's just everyone's bias. I think the way our government is approaching things is terrible, quite frankly. I think it has, of course, lined up most of our household wealth into the hands of the few rather than to the many. They're encouraging corporations to go out and buy our housing stock. CMHC, our housing regulators, encouraging people to convert properties to Airbnb and investors to buy homes for Airbnb, which shrinks our housing stock. Again, I think these are bad policies. I think we should have more homes in the hands of households so that they benefit, from whatever ideally modest appreciation prices rather than the few. And again, just different approaches. I think Canada's approach is quite terrible and has led to this massive wealth gap that's only accelerated over the past 9 years.
Yeah, I mean, there's, I think, ample reason to be skeptical, because if the argument is that in boom times, the government's figured out a way to not, stimulate the economy and also make money off our booming housing market, then wouldn't we have seen more affordable housing built by them a couple years ago when we were in our frothiest of times? We've never seen that connection made.
No. And listen, the feds are making some measures to stimulate purpose-built rentals. I mean, I feel for Sean Fraser, who's our housing minister, because I feel like this guy's doing stuff that's probably good, better than we've seen in the past. And then you have our finance minister drop a can of gasoline on the whole housing market, which I feel like undoes what they're trying to do. But, that's politics, I suppose.
All right. And you mentioned at the tail end of your almost, did it get into rant territory? I liked it.
Practically.
I did like the fire. You started talking about this idea of generational sort of, the injustice of it, that one group is getting left behind. But interestingly enough, the Liberals actually wrap up these new initiatives in the language of generational fairness. They are arguing that these measures help younger home buyers get onto the ladder, those that were increasingly being left behind.
Yeah.
So what do you make of that argument? You're arguing their approach is actually making it absolutely worse for that same segment.
I mean, it obviously is. Not like, so, I mean, if our honorable finance minister thinks generational fairness is loading up or saddling up the next generation of home buyers with more and more debt, if she thinks generational fairness is making sure the only people who can buy homes are the people who have parents who have made a lot of wealth through rising home price of the year and can borrow against them to use as their down payment, I mean, then she's doing a bang up job. I mean, that's what she's been doing for years, quite frankly. I don't think that's generational fairness. I think generational fairness is moving towards an environment where home prices are not surging 10% a year, where people don't need to keep borrowing more and more just to get into the market, where people don't leave their cities and their province and their countries because home prices are so out of reach in their hometown, and where you don't need to have rich parents to buy a home. I mean, to me, that's generational fairness. What they're doing is just encouraging more debt. That's not generational fairness. That's going to stimulate house price appreciation. So their understanding and definition of generational fairness is, I think, fundamentally different from what most Canadians want. And again, I think if we go back to my earlier tweet, I think most Canadians want flat home prices or slightly softer home prices and people borrowing with less debt, not surging home prices and more debt. And I think they're missing this. And again, I think, I suspect this will probably be reflected in the polls. I think they're kind of they keep missing the mark on housing.
Yeah. And it's already being reflected in some early by-election results. As the likelihood of election draws nearer and nearer, I have a feeling that they might get feedback.
Probably.
A very direct support.
Yeah.
On some of these moves. Okay, well, thank you so much, John, for unpacking that and giving us your mild assessment. No, mildly worded
nothing
assessment.
keys me up like honestly, these housing policies, these things that make things worse. And I think it pisses me off a lot because I'm on the ground. I see it. We see people who are being impacted by higher rents. We see people who are forced to leave. And it's just terrible. It's just, and I think this is why I find it frustrating, even though in theory I benefit from what they're doing financially. Like,
well, you can't, it's in the air. There's such a negative tone
it's
around
terrible.
Canada.
It is.
Because of this housing situation that's now become a social issue, that it's spilling out in all kinds of ways.
Yeah.
Like negative attitudes towards certain groups, newcomers, like it's just spinning out into absolute ugliness and mayhem.
Absolutely.
And at least emotional mayhem, I feel. So I can understand that even, why some groups that you think would just love making the money. Well, where are they going to live? They have to live in the society with all that money. And if you're living in a society that's angry and torn apart by the housing crisis, then
exactly.
It seems a little less palatable. So I do understand where you're coming from and where your passion's coming from. This is a very good discussion. So thanks so much, John. And thanks to all of our listeners and viewers. We will be back, of course, next week with another episode. I can't remember what it is off the top of my head.
We'll figure something out.
Yes, we're gonna come up with something. I know we have something planned. I just can't think of it. So stay tuned.